The Canadian real estate market is challenged. We see high interest rates. I know they've come down. It seems better. But when it comes down to the development investing side, there's definitely some high interest rates. We've got housing crisis. We've got policy issues with the provincial, municipal, and federal governments challenging that real estate market as well. We've got immigration, whichever side you stand on there, it causes a definite challenge. We have a lack of housing in Canada. Everyone knows that, and everyone's got a solution for it. But I want to talk about some of those key aspects that can benefit you as the investor, but also for those of you who are more on the government side, maybe you want to listen to this a little bit more. I just read an article this morning, actually. It was about David Eby, the Premier of British Columbia, attending the Urban Development Institute luncheon. And, some of the comments that I heard from them, whatever side you want to sit on, are interesting. One is that, he had blank stares and really doesn't understand what is happening in the real estate cycle and the economics in British Columbia as a whole, and the systemic and systematic challenges they're going to have over the next months and years as a result of some of those policies and challenges that they have, not naming the strike that's currently going on, which is just another big kerfuffle. But then there's other ones where it seemed that he was very responsive to a lot of the challenges that developers are facing. Because when it comes down to some of the government policies that we're seeing right now, they are challenging and they are going to have systematic challenges. And unless politicians are willing to listen to those who actually do it, I don't know if I ever see an end to it. The good thing is, real estate is not about timing the market. It's time in the market. Really what it comes down to is trying to time that real estate market is very, very challenging. I know us as large land developers, we have to somewhat time the market. We have to kind of pull back when we see recessionary policy issues having impacts to end absorptions down the road, just because we have several years before we have product that's available. But for the regular investor and for that intermediate investor, your timelines may not be as extended as ours. For us, it's about time in the market. We may buy lands and we may buy areas well in advance. I think in one of my other previous videos, I talked about a developer, buying his lands or their lands in 25 years ago, and they're now just taking it through development. That provides exceptional asset value. So for you as an investor, one of the key things that I want you to look at is there's never really a wrong time to buy real estate. There might be a wrong area or a wrong product to buy, but there's not necessarily a wrong time to buy real estate. It's about being able to ride through those market cycles. And overall, if we look at real estate for the last 50, 70 years, it's gone up in value. Inflation continues to go. Real estate continues to perform. So it really is the key concept that I want you to understand. It's about time in the market, not timing the market. You definitely have to look at those areas. You definitely have to look at the product you're investing in. That's some of those key concepts that you definitely have to look at. But you know what? If you're one of those quick fix and flip sort of people, then yes, you are trying to time a market space. You're trying to get through as quick as you can. So I know that sounds a little contradictory, but really that overall growth that you'll see in your AUM, your asset portfolio, your net worth, your family's net worth, is about holding those assets for a long period of time, going through those different market cycles and making sure you're prepared for them. So how do you prepare for them? Well, that's a whole other concept. Maybe we'll talk about that a little bit later. One of the other things we're seeing right now across Canada that's making this housing market very challenging is government policies. And I know I've talked about this in the past, but it is something that we really need to focus in on, especially as we come through to municipal elections and whatnot, and provincial elections coming up. Federals, who knows, could be tomorrow for that matter, whether or not the budget gets approved. Really, you need to look at what those policies are and the impacts of those policies. Because right now, what I see personally, this is not advice for you, this is just my own feedback on here, is I see governments continuing to try and pick winners and losers. And every time that happens, it creates monopolies and it creates more and more costs associated with it. So my call out to any politician or government official or, individual who's working within the government bodies here with, Start thinking about that. Think about the consequences of your policies and what they might be in the long run. Because I know you have good intentions with some of these, but at the end of the day, those good intentions definitely turn bad. What is it? The road to hell is paved with good intentions. I think that's a saying. So really, we need to focus in on getting stuff done. And the only people that can get stuff done are the people that actually do it. Just because you're sitting in an office, just because you're creating a policy, just because you're voting on a law, a bill, doesn't mean that that's actually going to produce what needs to get done. We do need housing in Canada. We need affordable housing in Canada. So why don't we have affordable housing in Canada? That's another good question. We have a large demand right now for housing due to primarily immigration and migration as people move across the country. It's putting strains and stresses on a lot of regions. And there was not the foresight of those municipalities, regions, whatever you want to call them, to start planning appropriately for that. The infrastructure was never in place. The spending may have been wrong in terms of, where the municipalities were spending their money. And, we really do need to create the infrastructure to be able to handle that growth and that number of people in that area. But we also need to be able to handle the housing. So how do we handle the housing? And it may not be condos. It may not be these ready build fast approval policies that are looking at. Let the individuals that do the work, because that's really what it comes down to, is we need, and I've said this before, and I don't mean to beat on it time and time again, but we really do need governments to get out of the way so we can actually do what needs to get done. Doesn't mean that we're going to skip steps or anything along those lines. There's a lot of developers, there's a lot of builders out there that are willing to do things the right way and want to do things the right way. Why? Because it's not always about the money. Sometimes it's about the pride of seeing the end work. And I've talked to numerous trades over the years. I've talked to numerous professionals over the years, and they are proud of the work that they produce. It's only a handful that you come across that are trying to make a quick buck, but you can smell those out really quick. So we've talked a little bit about government policies. We've talked about the housing crisis. We've talked about some solutions. We've talked about the investing, how to actually invest into it. And that's time in the market, not timing the market. So what are interest rates going to do for us? And when is that ever going to get fixed? Well, I've spoken about this before where we talked about inflation. And I don't, really want to drone on to it all that much. But really at the end of the day, when you print money, that devalues that currency, which creates inflation. Things go up in cost. Relatively, they're still the same. So now gold is what, $5,000 an ounce? Before it was $3,000 an ounce. 20 years ago, it was what, $1,500 an ounce. Gold is going to keep up with that inflation. So is real estate if it's timed well. In other words, left, kept to grow, and manage those cycles. One of the things I always like to say is if you have rentals, now might be a very good time to start chatting with your tenants. Say, hey, you know what? We're coming into a challenging investment cycle in 2026 or 2027. Or whatever the year happens to be that you're watching this. What is it that we can do maybe to extend your lease? Maybe we're not looking at rental increases right now, but we want to be able to maintain the individuals within that asset that we currently have and hold it for a long period of time. Maybe you're a family right now and you're considering doing multifamily. What are some of the things and aspects that you need to look at there? Run your numbers such that you're planning for that higher vacancy or that lower rental rate or not being able to get that quick refinance so that you're able to ride that wave up longer and see that investment grow over a period of time. Maybe you're just looking at investing in real estate. And if you are, here's my quick advice for you. Look at what that asset is that you're investing in, whether it's an investment fund or an actual physical asset. Understand the underlying asset. When did they buy it? How much did they buy it for? What value am I buying in at right now? Am I buying in at the same value that it was 5-6 years ago? Or has it increased in value and I'm buying it at market trends today? That might be the case. But if you can find those rare opportunities where you're able to come into that investment and they haven't changed, say, the unit value for a little bit of time. I don't know what the time is going to be. You'll have to look at that yourself and assess it individually. But if they haven't changed it, maybe that's a good opportunity for you. I was chatting with a investment manager just shortly, and one of the comments that was made is like, you know, when they're looking at bonds, they're looking at buying bonds at a discount. And I'm not an investment person. This is not investment advice, but it was one of the wonderful comments that I heard because it rang so true to real estate. You can compare some real estate assets to the bond market. And when you buy bonds, you're looking to buy them at a discount. So if you're able to buy into something that had an asset value of 1, 2, 3, 4, 5 years ago and hasn't changed it, you're taking that gain and that's that discount that you're seeing in that bond. And you're able to apply that to your investment gain. That's a good opportunity, or could be a good opportunity. Obviously, do your due diligence. But if you think about that there, if that investment gain, so they bought the asset for $100,000, let's say, or $1 million, or $10 million, or whatever it is, and it's currently valued at, say, 20 or 200,000, 20 million, whatever the number is, that gain right there is that discounted bond that you're technically buying at. You're buying that differential, and that's a good opportunity for you. Two reasons. One is it helps deal with a drop. In the event that asset values drop, there's that valuation right now dropping down to that table, right? The other thing is, if it gains from there, or they even sell at today's rate, you've gotten that gain. That's absolutely huge when it comes down to real estate investing. And hey, if you find the opportunities out there, I definitely say get some advice, seek professional advice, but really look into them, because there's a few of them out there right now that I've seen that are really good opportunities. There's also some land assets and some homes and some multifamilies that are priced way out of the market. And again, it's not about timing the market. It's about time in the market. And sometimes you have to look at those opportunities and you have to say, no, we're going to pass. We're going to wait. We're going to negotiate on this later. And I'm going to share in the future here, if you find it interesting enough, comment in the videos and comment in the posts so that I can know which section of these videos that you want me to expand upon. But one that I think I really wanted to expand upon for you is that negotiation aspect. How do you negotiate when you're acquiring property and you're looking at it for a longer term hold, not necessarily a shorter term hold? What are some of the tips and tools that you can use and strategies that you can use? And I'm going to rely upon some of the ones that I've heard over the years. And you know what? I'm going to give those guys credit because that's where they come from and they're really good. So these are some of the concepts that we're talking about right now. And I think I've covered quite a lot today. It's actually a pretty long video. I'm not sure how long, but it's definitely a long video today. So I hope you've gained something out of here. One is government's housing crisis, solutions to it, time in the market, and the other one is interest rates. How are we going to deal with interest rates? Where are they going to go? And just on that ending note, do you think interest rates are going to go up, or do you think interest rates are going to come down? And either way that they're going to go, how's that going to affect the real estate market in your area? I'd love to know. I'd love to get into the discussion with you and find out a little bit more. As always, if you like these, please like. If you find them valuable, please subscribe and follow and comment for more, because I'd love to be able to share more with you.